Imagine buying your dream boat and writing off the entire purchase immediately. Sounds too good to be true, right? Not with the big, beautiful bill. And today we're going to break it down for you. The show where we dig into the issues that truly shape the marine industry. I'm your host, Kim Sweers, also known as the Boat Boss and managing partner of FB Marine Group located in Fort Lauderdale, the boating capital of the world. And today we're talking about one of the biggest shifts we've seen in years. This past July, the U.S. Congress passed the One Big Beautiful Bill Act. And for yacht owners and prospective buyers, the OBBBA reinstates 100% depreciation for charter yachts. And that means if you're considering putting a yacht into charter, buying one, you may be eligible to write the entire purchase price off in this first year. Whether you're a seasoned yacht owner or someone ready to make your first purchase, this is a game changer. And to help us understand exactly what this means, how to leverage it, the loopholes, the pitfalls, all that good stuff, I'm joined by one of the sharpest, the brightest legal minds in our industry, Umberto Bonavita from Robert Allen Law. So Umberto, welcome to Yachting Unplugged. And how is it affecting our marine industry?
Yeah, I mean, there's tons of aspects to the big, beautiful bill. The aspect of the bill that relates to yachting, if you will, there's many aspects to it, deals with bonus depreciation. And previously, we had bonus depreciation, but in prior years, Congress phased it out over time. So you were able to depreciate 100% of the cost of the asset that you purchased. But assuming we're dealing with a qualifying asset, in prior years, you were able to depreciate 100% of that in the year you put it into service. But then there was a phasing out approach. So each year, the percentage that you can depreciate reduced. So it went from 100 to 80 to 60 to 40%. And what Trump did was say, okay, we're not going to phase it out. We're going back to 100%. And it reinstated what they had back in 2017. It also takes a lot of what Trump, the tax benefits of his initiative when he was in office previously in the prior administration, before Biden, and now it's basically making a lot of those incentives, a lot of those initiatives permanent. It's enacting them permanently.
So what was the boating in the yachting industry back then? I mean, what did it do for the industry in 2017? Was there like a frenzy, buying frenzy? What impact did it have?
It certainly prompted a lot of high net worth individuals that can afford to have a yacht and that have a tax reason to reduce their taxable income, their taxable liability, to look at yachting as a way to incorporate and diversify their wealth management, estate planning, and tax planning needs. It's another tool or arsenal that you could have in your overall wealth preservation scheme and seeking to obviously, minimize your tax liability in a way that allows also, from the government's perspective, stimulate the economy, stimulate spending and consumerism and spending. And that's the great thing about this is it touches upon so many aspects of the yachting industry. You're going to need to deal with a crew and competent crew and employee crew. Even if maybe you have a smaller vessel that you can say, hey, I don't really need a crew. I can do this on my own. If you're looking to do bonus depreciation, you're going to need a crew because from the IRS's perspective. So really the key is, I would say, is like in the past, like let's take an office building, for example. You were able to purchase an office building and let's say the IRS categorizes each type of qualifying asset. So for example, in the case of an office building, they'll say, well,
let's get into the nitty gritty. Talk about the boat and the yacht or both that qualify for this 100% bonus depreciation. What does that space look like for our clients that are listening?
So let's start with the premise that to pull this off successfully, meaning that the IRS would approve it, or if the IRS looks at it and they want to audit it, they'll give you a clean bill of health and say, okay, you did this properly. They want to see that you're doing this for profit, that you're running a business. And the opposite of that would be if they determine that you purchased the yacht, which is great, there's nothing wrong with that, but you did it for recreational, personal use. You did it for your own enjoyment. So that's kind of the point of departure. If you want to be able to successfully accomplish bonus depreciation, you have to establish that you're running a business. What's the right yacht? What's the wrong yacht? Is not like a bright line test that says, well, if the yacht is under 50 feet, it's not going to work. Or the yacht has to be a minimum of 50-meter yacht. That's not the case. The answer to the question that I advise clients is it has to be a yacht that you can establish that you're running a business out of. So in this case, it would be running a charter business. Mm-hmm. So if you can establish that you're running a charter business with the center console, mm-hmm. then why not? You can do it.
Excellent.
You just have to be able to evidence that and establish it. And nice. And how would you do that? You would have to basically start foundationally. You have to have the proper structure, ownership structure, to make sure that, for example, if you have it titled in your own name, the IRS might say, well, that's not really a business because it's not owned by a company. If you have it owned by a corporation rather than what they call, in IRS terms, a disregarded entity, that's kind of like a pass-through. It should be either an LLC or a partnership.
And you can't, correct?
Yeah, the IRS will say, well, that's not going to work. If you have independent contractors, day crew that work on a per diem basis as independent contractors, they're not on your payroll. They're not. The IRS is going to look at that as a red flag and say you're not really running a business because you don't have the employees. So there's not like a bright line test that says if you do A, B, C, and D, you're going to be eligible. They look at the whole kind of landscape of how you're utilizing the yacht, how many days you used it personally versus how many days you had it in service. But at the end of the day, you need to convince the IRS that you're running a business. And how do you run a business? Well, what are the indicators that you're running a business? If you're operating it locally in Broward County or in Miami-Dade County, you want to establish that you went out and you obtained, for example, a business tax receipt or a business license for the entity that owns the vessel, because that's evidence that you are running a business. The same way that if you have a dive shop or a bait and tackle shop, you need a business license. Or if you're going to charter a vessel and that's the business that you're running, you need to have a business license for that. And it might seem mundane and trivial to say, well, I got to go get a license. But these are the things that the IRS are going to look at as signs. Are you running a business? Is this for profit rather than is this motivated by personal recreational use?
Right. All right. So I took some notes. So A, it has to be a business. 100%. Like most of the people we're speaking to are probably business owners or executives. They get it. They do this day in and day out. So it's just replacing the apple with an orange, if you will. It's a business and it has to look, smell, quack, everything like a business. Correct?
That's exactly right.
Okay. Now, the next thing I wrote down was employees. They cannot be 1099. They can have to be employees, whether part-time or full-time.
Correct. They have to be on the payroll of the entity, the same entity that owns the vessel, or an affiliate company that shares a common ownership, a common parent with the entity that owns the vessel. Again, I'm simplifying it, but that's kind of the overview.
Right. Well, I have a client.
At the end of the day, in terms of how you hire employees, you want to be able to tie the employees, your staff, your crew, and the vessel to the same ultimate beneficial owner, who's the taxpayer that at the end of the day is seeking the depreciation.
I see. So for instance, I have a client that has a yacht that one of their mates and stews also works in what they call the home is owned by the LLC.